Sunday the 16th of April, and we are on the Australian dollar US dollar. So let's have a quick recap of this market from last week in relation to our Sunday analysis video, and then we'll have a look at the market for the trading week ahead. Okay, so the main thing on the Australian dollar US dollar has been this double top. We created the first swing, the first high, and then the market came back up. As it came back up, we went over how we were potentially looking for weakness at these levels because it was a key resistance area. When we started to see that weakness coming into the market, we went over how the potential was there for this to be a double top, and we could expect a bearish move down on the market. Now, with things like double tops, for me, this is what I prefer to do. I prefer to look at the previous swings. If it's at key levels, I look for the weakness, and then I look for that expectation of the move down on the market. Now, we went over the areas here also, which were the 50% retracement after this leg up. We're looking for bullish positions, bullish sentiment coming into the market. That's what we've seen. The weakness continued afterwards, coming down and creating this double top. Now, the textbook definition for double tops, how is it traded? What I'm going to do is go over this, and then I'm going to show you exactly why I prefer to trade the double tops the way that we looked at it. Textbook definition, confirmation of the double top is a break below this central pivot, this area right here. If you see the market breaking below these levels, you look to get short. That would be the confirmation of the double top, and that's where you're supposed to step in. Now, for me, I prefer to look up at the previous key swings, look at it as a key level of resistance, and then look for that weakness, like we did, on expectations of the move down. Now, because the break below the central pivot, so if it's a double bottom, it's the exact same thing, it's simply reversed. So you'd have the move down, the bounce up, the move down, the bounce up, and then people look for the break of that central pivot once again. Now, because that is the textbook definition, big money, smart money knows this. They know that these levels are watched by lots of traders for the breaks. So what do you see? You see the market coming down, breaking below, breaking below, breaking below. And what it's doing, there'll be countless traders looking at these levels. They'll be looking on things like the 1 hour chart, the 15-minute chart, looking for the breaks below the central pivot, looking to get short. The market comes down just enough to pull them into the market, and then it reverses, and we see a bullish move up, and they all get stopped out. That's why in last week's video we went over, let me just mark this in, that this was potentially good levels to look for those bullish positions. For the bearish sentiment to continue, we would need to see confirmation of the break. So confirmation of the break would be a daily candle. So a full day's trading breaking out of this level. Here, you can see this is testing the level and then rejecting, testing, rejecting, testing, rejecting. We would be looking for a full candle down below, breaking that level. Then the pullback for the resistance before the bearish move. When that's not happening, we had this level pegged as key support. Being a little bit careful of the MA200 up above, where we may see potential resistance. That's exactly what came into the market. You can see the market testing, failing, holding as support, and then we're getting that bullish move up. So what are we looking at coming into next week? Well, first of all, that level down below still remains key. It's key support. It's also a great area to watch for the market breaking below. If we do start to see those breaks below, we can look for the pullbacks and then the potential bearish moves on the Australian dollar, US dollar. Now we're also pressing back up into our key levels. We've actually already had a rejection up here. Let me just mark it in. So if you have been keeping up with the Sunday analysis videos, we have gone over these levels a number of times also. Swing up, rejection at the levels. The break above, we come down, we test. So sellers stepping in here, buyers stepping in here. Market comes down, holds at the level, breaks below, rejection, breaks above, comes down, holds at the level. We see buyers stepping in, and then we fall below. So as the market was coming back up once again, on the Thursday, we were looking for potential sell positions up at these levels. It's exactly what we've seen. We've seen the rejection coming into the Australian dollar, US dollar. Now, coming into next week, these remain the main levels. This level here is great for potential resistance if we see the market holding at the levels, and then potentially driving back down to test once again at these key levels of support. Now, if we start to break above these levels, although it is key resistance and it would be a bullish sign, we still have lots of congestion up above. You know, we don't have what I term a clear road. So a clear road would be, you know, something like this, where the most recent price action movement has been a strong movement with really not too much hesitation. You can see the move down here. It came down. It's been really no hesitation. We actually went over this way back in December, and we went over how these levels down here were key support. You know, there's a video somewhere on the channel dated around these dates. We went over these levels. Because this market had came down so cleanly, we were looking for potential key support, you know, at least back up into the levels right here. And the reason for that was the market had made such a clean move down. When it's making a clean move down like this, it's giving you that clue that the move, if it comes on the way back up, is going to be similarly strong. However, when you have areas like this, and we identify these levels from the price action back here, you can see the market is testing. It's very, very choppy. It's giving you a clue that potentially you're going to see a lot of buying and selling at the levels. You know, it's unlikely you're just going to see, not that it doesn't happen, but it's unlikely you're just going to see the market ramp through very, very easily with a move like this. So if we start to break above these levels, we have to be careful up above at these levels, because it remains key resistance. So we can continue looking. You know, there's numerous areas of support and resistance up here. If anything, the advice would be, to be more cautious up at these levels. Only take, the really clean, good price action, because it's very, very easy to get pulled into imperfect trades when the price action is like this. And, you end up having lots of silly losses that really aren't necessary. With trading, sometimes it is about waiting. It's about waiting for the perfect trades to set up. Rather than, a lot of people sit down at their desk, at their computer on a trading day, especially day traders, what I'm talking about, and they think they have to take a trade on, the Monday, the Tuesday, the Wednesday, the Thursday, the Friday. That's not the case at all. And you only want to trade when you have the highest probability of succeeding with that trade. Sometimes I don't trade for 2-3 days in a row. It doesn't happen very often, but when those periods come, it is important that you just sit back. You don't jump into the market, because sometimes the safest place to be is out of the market. Your account is protected, you're not losing any money, and then you wait for those high probability setups, like rejection from this level. You get the rejection, you get the nice trade. Okay guys, so that is everything going into next week. I hope you all enjoy the rest of your Easter weekend. As always, I hope that was helpful. I'm James Orr, and thank you.